Welcome to Alpha Insights. I'm Ryan. Today we're digging into a string of policy and capital moves in the cannabis sector with social media commentator and market explainer, Aiden. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Great to be here, Ryan. Lots to unpack, especially with a federal court decision and fresh lending showing up in the space.
Quick housekeeping. Markets were closed on Saturday, May 23rd, so when we talk prices or market context, we'll refer to data as of Friday, May 22nd, and note that trading resumes on Tuesday, May 26th.
Perfect. That matters because headlines can move sentiment over a long weekend, even when trading is paused.
Let's start with the court ruling. A federal judge dismissed a lawsuit challenging the Medicare program that covers certain hemp products. Aiden, why does that matter?
So, bottom line, the program allows up to $500 of covered hemp-derived products per eligible beneficiary each year. With the lawsuit tossed, that removes an acute legal risk for the program itself and for companies that rely on hemp-derived wellness products. It doesn't change everything overnight, but it creates a clearer pathway for payer coverage.
Interesting.
And the reason that's meaningful is Medicare exposure can bring a more predictable revenue stream for consumer brands making CBD or hemp formulations. If payers are more certain, marketing and distribution strategies can be built around that predictability.
So less legal tail risk and maybe more reliable demand channels. Got it. Now there's also chatter about federal rescheduling and clemency. Walk me through that.
Right. Lawmakers are pushing the executive branch to follow any rescheduling moves with commutations for people serving federal sentences for marijuana offenses. That's a political follow-through. Rescheduling changes regulatory classification, but it doesn't automatically free people. If the administration acts on clemency, that would reduce a social and legal friction point and could accelerate clarity across the industry. Which connects to investor sentiment. Clarity on legal status plus visible clemency would likely improve the sector's perceived risk profile. Analysts note that's the kind of news that can change institutional willingness to engage.
Okay, switching gears. Capital is coming back in a measurable way. Fund Canna announced roughly $75 million in total capital, with $35 million immediately available after securing a $60 million credit line from a partner that reportedly manages about $40 billion in assets.
Yeah, that's a pragmatic development. More lending capacity eases funding stress for smaller, multi-state operators and ancillary firms. It doesn't eliminate credit discipline. Lenders will still price risk, but availability matters. It can help with working capital, inventory, and M&A activity for growth stage players.
So, not a free pass, but a sign liquidity is returning.
Exactly. And honestly, I was a bit surprised by how quickly some institutional players are dipping in.
Interesting. Now there's some state-level friction we should flag. Minnesota froze a testing lab license, and Virginia's governor vetoed a sales expansion that would have unlocked about $50 million and hundreds of jobs. How should listeners weigh that?
State execution is the wild card. Minnesota's lab enforcement is a reminder that compliance matters operationally. A single licensing action can disrupt supply chains or slow product rollouts. Virginia's veto shows political risk at the state level can undercut near-term growth, even when federal momentum exists. So, selective exposure and diligence on regulators' track records is key.
Right.
And on the consumer side, good news out of Canada. Retail cannabis sales in March rose about 7.5% month over month to 471.4 million Canadian dollars. That suggests demand resilience in the end market.
That's encouraging.
So the macro picture is mixed, but leaning constructive. Federal policy momentum, returning capital, and consumer demand holding up, offset by state regulatory noise and execution risk.
For people listening who track specific names, what should they watch heading into next week?
First, any implementation guidance from CMS or appeals after the lawsuit dismissal. That affects how hemp products get reimbursed. Second, statements or actions from the White House on rescheduling, follow-through, or clemency. Third, watch FundCana's deployment plans and similar financing headlines to gauge liquidity. And finally, monitor state updates in Minnesota, Virginia, and Texas, because local moves can have outsized impacts.
And the names folks often track include the big U.S. cannabis ETF and operators like TrueLeaf, Green Thumb, Curaleaf, and Tilray.
Right. And remember, analysts note momentum is building, but it's selective. Regulatory compliance and capital structure still drive valuations.
Last quick FAQ. Will rescheduling automatically free federal prisoners? Short answer?
Not automatically. Rescheduling changes how the drug is classified, but commutations or pardons require separate executive action or legislation.
Got it.
Okay, quick reactions?
Right. Before we wrap, give our listeners 2 or 3 quick takeaways.
Sure. 1. The court dismissal reduces short-term legal risk for Medicare hemp coverage and supports potential payer access for hemp-derived products. 2. Institutional capital is returning in measured ways. That eases liquidity stress but doesn't remove underwriting scrutiny. 3. State-level enforcement and political decisions remain material risks, so stay selective and focus on companies with strong compliance and capital plans.
Great summary. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks, Aiden, and thanks everyone for listening.